We've got some underlying foundations that we believe underpin the property story, and we're going to talk about those today. We've got 7. And the first one is we've got a strong economy. We are punching out of our weight division across the globe as a response to the pandemic. We were doing that before anyway, in terms of our population versus the output that we're providing. It's a fact. Our economy is good. Everyone should be happy about that. And if interest rates significantly go north, that is symptomatic of a strong economy, because they're not going to do that at the expense of the economy, given that our homes are protected at the ballot box, because they'll do whatever it takes to protect them. So, Ben, it's a fact. We have a strong economy.
We do. You know, the story around unemployment is the big factor here, Bryce. So it's, if you look at the triangle of doom, the triangle of doom from an economic point of view is high inflation, high interest rates, and high unemployment, right? So where we are right now is we've got a situation where we have very, very low unemployment. And so whilst we are definitely seeing this sort of spike in inflation, and that's naturally resulting in higher interest rates, we've got to remember that those interest rates are coming off a record low. So employment is a critical element of being able to earn income to make those repayments. And we are going to see some wages growth. So even though technically real wages growth, real term wages are lower than what inflation is at the moment, there is wages growth coming through. And we heard the Reserve Governor talk about that. So strong economy means, you know, this is going to be really, really an ace in our pocket. Now, those people who are naysayers are going to say, but Bryce, Ben, you know, we're going to go towards a recession. Like, this is potentially recessionary if we can't get in control of inflation. Now, I'd be saying that is a big statement in terms of whether we're going to go anywhere near that. When you consider the record levels of government spending, you can also look at mining investment, business investment, and general consumption. All of those things bode really well for strong GDP growth. Immigration comes in, investment starts to come in. We're not seeing that show up in terms of the overall economic data that we're looking at. So we want to keep an eye on business investment. We want to keep an eye on consumer confidence. We want to keep an eye on all of those things. But right now, where it currently sits is things are pretty good in the economy. If that momentum continues, then things are going to be pretty good for, you know, our first thesis, which is people are going to be employed, and that means people are going to be able to make those repayments en masse. Remember, we're talking about what's a critical thing here is a mass exodus of people, forced sellers coming into the market, and that's going to be one of the reasons why you're going to hear these people, these commentators, arguing for a crash.
Ben, I think one of the ways to keep the economy strong is a little bit provocative here, is by making sure everyone turns their telly off. If you just don't buy into these stories, that'll help, because you've said it at the top of the show around the real risk here, if we want to put all cards on the table, is that self-fulfilling prophecy of everyone retreating into their shell. So the first reason we think there's a soft landing is we're in a strong economy.